Welcome back. Government's housing subsidy program has made a difference to aspiring homeowners. More than 112 million rand has been approved to subsidise home loans since the initiative was launched in 2010. But the National Housing Finance Corporation, which runs the program, says funding mechanisms are inadequate and administrative hurdles are preventing more people from benefiting. The program offers a down payment to banks for qualifying beneficiaries.
Many South Africans aspire to own homes, but only a few can afford to even apply for a loan. Government responded in 2010 by announcing a 1 billion rand guarantee fund to incentivize the private banking and housing sector to help. Those with a household income of between 3,500 and 15,000 rands could apply for a bond of up to 300,000 rand with the help of the subsidy. Last year, government increased the bond limit to 400,000.
We reviewed some components of FLISP, which one limiting factor was the cap on the house price. The developers said they don't like it because most people want to buy houses 380, some want to go to 400. Now there's no cap. Now since we said that, there are about 200 million applications that are coming in. We're really inundated. People are saying that's where the market is at.
Banks say the program is largely working well. According to Peter Swartz, Head of Business Development at Absa Home Loans, 207 customers with a total value of 50 million rands have qualified for housing through the assistance program. But it's not without its challenges. Nedbank says the subsidy approval process is still cumbersome and time-consuming. Jeff Lawrence, Head of Affordable Housing Home Loans, says with an improved administration process and availability of funds, the program can do better. Property developer A.J. Rothman agrees that there are problems that should be looked at.
The biggest single challenge right now is for that administrative process to catch up with the, I think, increased level of interest so that the time periods for approval can come down. That is, I think, the single biggest challenge. I think the other big challenge, the one that for me is really critical, not just for us as an industry and for the delivery of houses, is that the allocations and budget allocations to this product are continuous and they don't fluctuate, or there's no gaps in that, because what that might mean is that people will hold back on buying a house because they're waiting for new allocations of funds to be made available. And that could have an enormous impact on our industry.
Currently, the National Housing Finance Corporation relies on funding from provinces to approve their applications. This often leads to delays in concluding sales. Marabe says the funding mechanism has to change.
The only one factor that we're dealing with at the moment is how can we fund FLISP on a more concrete basis. At the moment, just to explain it, the allocations come from the provinces, they get sent to NHFC, we match it to a mortgage that is provided by the bank. Okay. Now, we are, through the ministry, engaging with the provinces, and the minister is leading those engagements, so that we see how can we actually optimize the opportunity of making FLISP a bigger bucket of money made available, because in total, that's only 1/3 of what the banks are able to provide, which is 2/3. So the leveraging factor is it makes business sense. Yet on the other hand, if FLISP was allocated a budget centrally, and that budget being granted to the NHFC, obviously we need to report back, give accountability to say how that money was used. That would also speed up the whole issue of turnaround time, but it would also give the bank certainty, a developer certainty to say what we have approved, we're able to match on the other side.
The two key things for us are, let's really work together with the NHFC and government to make the administration of this process as good as we can, and the other one is to make sure that the allocations of funds keep up with the demand.
According to FNB's latest property barometer, houses in formerly classified black townships remain the most affordable. An average estimated house price was just over 300,000 last year. Township house prices in the 6 major metro regions rose by 9.5%, up from 6.5% in 2013. The hike suggests that demand for affordable houses remains high, and a well-oiled subsidy program can work with increasing demand. Diabo Seto, SABC News, Johannesburg.